Introducing Abaxx Enwex German Onshore Wind Futures. The first financially settled futures contract designed for Germany's renewable power market, with settlement on the Enwex Wind German Index. Transparent hedging, better risk management, smarter weather markets. Abaxx Exchange. Smarter markets are here.
Hello and welcome to Abaxx's German Onshore Wind Futures Launch Webinar. I'm Dave Greeley, Chief Strategy Officer at Abaxx. I'm joined by my colleagues from the leadership team at Abaxx Exchange and Clearinghouse in Singapore, Dan McElduff, President, and Joe Rea, Chief Commercial Officer, as well as Alistair Weir, our Global Head of Environmental Markets. We have with us today our special guests, Girmes, Enwex Founder and CEO, and Ronny Bendlin Spür, Weather Trader at Gunvor. So thank you both for joining us. And together we're going to introduce you all to our German onshore wind futures contract and the Enwex German Wind Index against which it is financially settled. We'll discuss some of the opportunities for weather trading and risk management this contract creates, and inform you of the steps that you'll need to take to trade this new weather market on Abaxx Exchange. We'll also answer any of your questions, which you can submit using the Q&A feature on the controls toolbar on your screen at any time. So let's get started. At Abaxx, our mission is to build smarter markets, markets empowered by better financial technology and market infrastructure to address some of our biggest challenges, including the energy transition. And to that end, we launched Abaxx Exchange and Abaxx Clearing, a Singapore-based but global commodity futures exchange and clearinghouse, recognized and regulated by the Monetary Authority of Singapore as an RMO and an ACH. And now Abaxx Exchange and Clearinghouse has launched the first in our planned suite of centrally cleared, financially settled futures and derivatives in weather to provide you with better price discovery and risk management tools. This product extends our product offering of LNG, voluntary carbon market emissions offsets, battery materials, and gold futures. Each of these products are the result of years of our team working with commercial market participants like you to build products that best meet the market's commercial needs. And we expect that our futures contracts and our product slate will continue to evolve over time as the needs of the market evolve. We have built a team of experienced industry veterans drawn from the leading global exchanges, including NYMEX, CME, and SGX, as well as the commodity trading desks of the leading investment banks and natural resource companies, including Goldman Sachs and BP. The team is backed by a group of strategic advisors who are each deeply experienced market practitioners who have spent careers trading and running trading desks, who advise us on the development of new futures contracts and markets. But let's get down to the specifics, and for that I'll hand it over to Robin, Founder and CEO of Enwex, to introduce you to the Enwex German Wind Index and methodology, after which Dan will introduce you to Abaxx Exchange's new financially settled German onshore wind futures. Then we'll turn it over to Ronny to discuss some of the opportunities for trading and managing weather risk with these futures, after which Joe will discuss the next steps you'll need to take to access and trade these markets. And with that, I'll turn it over to you, Robin.
Thank you very much, David. So I just want to introduce a very high-level overview of what we thought with those indices named Enwex. Enwex stands for Energy Weather Indices. So it's mainly focusing, at least initially, on energy markets. We had ourselves practical experience with trading CME products for temperature. We had also some other hedging efficient experience in former stations of our careers, and were a bit unsatisfied, or let's name it this way, the scheme doesn't fit that good to European demand and especially not to renewables. So we tried to set up a systematic which could be used for standardization of weather into traders' needs, into European markets, but as well still recognizing the American needs. Those weather products, these volumetric ones, are structured as energy products, meaning that is a multiple of hours. You can cascade them from yearly contracts through quarters, months, days to even hours. And this allows then hedging for power, wind and solar, or gas temperature positions, as well as for PPAs if you just go for multiplying wind or solar each hour with the price outcome for a certain hour. Then you have market value and can calculate a PPA prices. So it's another topic which is a bit cornered in Europe. So PPAs could become a tradable future financial product as well. We try to be that transparent as possible. So we publish all formula needed, all grid points, all details. So in theory, each market participant is able to calculate the same indices for settlement on its own as we publish at enwex.com. And the only model taken into account, the only weather model, is the operational one from European Center for Medium Range Weather Forecast, ECMWF, which is, from what we heard, not just from Europe, the most credited one, and it's completely independent. So nobody can do anything on the values published. The concept itself, I show it on the next slide, is globally scalable. So we made assumptions which are, let's say, accurate enough from the meteorological point of view to meet the traders' needs. So what do? Here we talk today about German wind, the first index being launched, and therefore we here look into how this concept is working with Germany. We have 3 steps. First step is we have to define representative grid points per hub, country, whatever. So here it's a countrywide mean as mainly for most of the indices, and we just grant, after some tests, to take the centers of each province or state in the US or whatever in the countries. You have the first level below countrywide is available everywhere. Take the center of that, the nearest neighbor grid point from ECMWF. You see in the tabular right, step 2, those latitude and longitude coordinates, and then you go in step 2 to weight the installed capacities of the country in percentage to those provinces. So just for an example, in the northwest of Germany, there's relatively high percentage of installed capacity compared to the entire country. Therefore, a region like Schleswig-Holstein having its 12.7% weight here, or Lower Saxony even 21%, despite covering maybe less coverage in a spatial point of view. But installed capacity of the entire country is weighted then by those provinces' installed capacity. This is valid for wind and solar. For temperature, the concept is a bit different. Here we're looking for, let's say, the volatile part of demand, therefore for the population. So it's the weights for temperature along the population weights of a country. In step 3, we then apply just the weather forecast data to meter temperature is just used for the temperature indices. So it's really just temperature for that grid point per hour weighted along the percentages. And then you have your hourly values per country. For the incoming shortwave radiation, you transfer it just with a linear coefficient to solar outcome. Also, those indices, those renewable indices, are percentage of installed capacity in the end, while temperature is the absolute temperature in degrees Celsius or degree Fahrenheit, depending on your country. The 100-meter wind speed as well then is in the end a utilization term of your installed capacity. It's a capacity factor if you wish, but on the other side, wind has to go through a nonlinear function, which we artificially created on the back of backtesting against the produced power. So each country has one specific generation curve, 12 grid points, And this is everything you need to know and to calculate to get to your index. So in the end, it's very easy compared to the potential complexity if you would choose each wind turbine and each turbine generation curve instead. Yeah? Then it's a black box. Next slide, please. Yeah. So what can we do with that? You can use it mainly for hedging, yeah, but also for trading, of course, if it's liquid enough. So here's an example on how that could work if you're, for example, worried about low wind power production in winter. You expect more winds. You have maybe sold more winds to come. Maybe looking into 10-year means as your expectation value and are worried about less utilization this winter. Then you go for a short position, you sell the wind index, then your payout is positive in case of having less wind than normal or less wind than your traded price. On the other side, if it's turning out to be more wind, then of course you lose on that short position. So it's just a linear type of hedging in this case. Next case, this is the example for German wind or German indices in total, as I named maybe a bit bold in the first slide, but in the meantime, it's realizing this concept is globally scalable. We here talk about those indices in its version 26, so valid for settlement next year. We're talking here about now 10 countries in Europe, each of them temperature, solar, and wind onshore at least, some of them also wind offshore, therefore as well a wind combined index. And beyond Europe, we are also starting to set up regions or countries in the US, for example, the ERCOT and PJM trading hubs. We set it up Japan, 2 regions in Australia, and especially we also set up aggregated gas demand regions for East Asia, representing JKM marker, the Northwest European out of TTF plus NBP, and the East US one, which we don't name Henry Hub, but it's exactly covering that area. Thank you.
Okay, so now we're going to get a bit more into an overview of Abaxx and our product slate and dig a bit deeper into our German onshore wind product as well. So for those not familiar with Abaxx, we are a full stack futures and options exchange and clearinghouse. We provided capabilities for trading, including reporting OTC trades that are blocks or EFRPs, as well as central limit order book trading. And we partner with leading third-party service providers in the front end. So if you're sending orders into our order book, TT, CQG, and more recently Stellar are providing services. So if you're connected to them, you're one step closer to trading on our exchange and trading German wind. The clearing solution we have aligned with our clearing members and additional clearing non-member clearing firms. Our clearing members include ADM, StoneX, and KGI. Our non-clearing members include Marex and Mizuho, and the list is growing. It could be that if you have a clearing service firm that I've not named, they're ready or near to be ready. So please contact them and engage them to connect. Our technology provides interfaces to capture market data to support straight through processing for the front office and the back office. Our clearinghouse solutions connect through ION and FIS. And the infrastructure is all on cloud native systems, that are modular, or allowing us to scale up with the intent that we're going to be expanding our product base as we have on a pretty regular basis since we launched in 2024. At launch time, we introduced futures contracts for LNG as well as carbon. Since then, we've added battery materials, including nickel sulfate and lithium carbonate. We've stepped into our fourth pillar of products with precious metals this year, And now we're adding to our environmental products with weather. And we're here to tell you about the German contract, the German onshore wind contract that's already been launched, but to get some sense of what our intentions are in the portfolio, the table that Robin presented with additional locations for wind, as well as additional sectors in the weather space to include solar and temp. These are all in our pipeline with additional UK contract to be launched soon. We'd ask you to stay tuned for some news on that, but that'll be in the very near term. The nice thing about this contract set is that the index methodology of Enwex is consistent across those sectors of wind, solar, and temp. So we do intend to respond to the demands of the industry in terms of adding these additional locations and into the sectors of solar and temp. So if you understand the German contract, if we can move on to the next slide. If you understand the German wind contract, then you're going to really understand the structure of all the other products that we launch in partnership with Enwex. Robin pointed out it's aligned very much with the structure of power markets. And so it should be pretty simple for any power trader to understand. To start, the contract code or for symbol for this contract is GWM. We make reference to a rule chapter. Cash settled contracts are pretty simple boilerplate stuff, and I'll point to the things you really need to understand in the spec sheet if you don't already. And this spec sheet really tells you everything you need to know. But if you feel like reading futures rule chapters, please do. And that's all. All this information is on our website too. So we started out listing 12 contract months. We'll go as far as you need, and as the market will demand. We just start with 12 so we can set the stage for the curve. And from here on in, we just want to be able to adjust with parties with skin in the game and open interest, being able to, send the information in that we need to produce accurate forward curves. So whenever there's demand to go further out, we'll be ready to scale that up. The pricing terms of the contract are reflected as euros, where the index is applied to that value, and the value is going to be representative of the utilization rate, and consistent with the final outcome of where the Enwex values come out during the contract month. The contract unit, we say our contract size is multiples of hours in the contract month. Generally speaking, that's hours times days in a month, factoring in daylight hours wherever that's applicable, particularly in Europe, where we add an hour in the fall and take one away in the spring. Our trading hours right now, these are Singapore hours, which generally will cover the Asian and through the end of the European trading day. And we have plans to expand that to a more consistent with the 24-hour cycles in the exchange business. So settlements, two important things to note here. The daily settlement process of marketing things to market is consistent with industry standards. We're looking at it at bids, offers, and trades done during the settlement price period, which is the 5 minutes leading up to 22:30 Singapore time. Now that's a bit different when we get into the pricing month for the contract month. That's where we're beginning to calculate our final settlement price. And the final settlement price is going to be all the values published by Enwex for the period in the contract month. So, for a contract month where there's 31 days, there'll be 744 valuations published, and that's we'll take the average of those. That'll be the final settlement price for the contract. The last trading day, we set as the business day following the contract month. This accommodates circumstances where there's still day ahead forecasts that are going to be released in the days and weekend days near the end of the month. And the as I said before, whenever you're trading at Abaxx, you have the capacity to trade OTC and do block trades. The minimum block trade is 5 lots, and reportable and position accountability levels are, again, standards for us understanding who's in the marketplace. Anticipate there'll be some questions. We're going to have a Q&A session near to the end of this discussion. So please post your questions. There's a place you can do that in the bottom of the screen, and we'll address any questions you have later on in the discussion. And now I'm going to hand off to to Ronny, who can give you the trader's perspective on use of these products.
Thanks, Dan. Well, before looking at current opportunities, I want to give you a little bit an overview where we're coming from, right? I mean, like looking at weather derivatives today, and I want to spare you a history lesson, but however, I think it's very important to set a little bit of scene. So weather derivatives and hedging, as we see it now, all started basically off mainly hedging exposure around the winter times for retail books and utilities. So it was either a demand side or supply side hedging. And so you are protect against a too warm or too cold winter scenario. And that was mainly based on a very centralized, driven fossil energy system, right? And it could been achieved back then either by standardized contracts, as you already seen it over the last decades on a different exchange, or it could be basically OTC trades that you're having somewhere with players back then, mainly reinsurance companies, right? Fast forwarding everything to today, we are in a totally more renewable driven system, right? So wind, solar, hydro play a massive role. And that's all weather dependent. And then we also basically went away from very centralized systems into very decentralized systems with more cross-border connections. And furthermore, also the players in the energy system changed completely, right? So you have more hedge funds now, you have prop trading shops, you have asset managers, you have IPPs, you have corporate PPA off-takers, what have you, right? And each of those players are somewhat differently exposed to weather scenarios. Taking wind for Germany now as an example, what we see and where there's a lot of activity in that market, you can see what I showcased here is basically Q1 wind in Germany using the Enwex index. So that's the average for whole Q1. And that goes back basically until 1980, right? So you see the full sweep of the history that is available on the index. If you look at the means, which are displayed down there in the table, you say, okay, 10-year average is roughly 29.5% on Enwex. And if you look at the red square on the right-hand side, this is basically the value delivered in Q1 25. And everybody that was active in Q1, no matter what position, you either saw a great upside or a great downside, right? But if we take that as a indicator of what you want to hedge, and you want to use that index, and you are, let's say, a player in a prop shop, the worst thing if you're in Germany short, it can happen that wind gets incredibly low, right? So if you would have basically hedged yourself against low wind scenarios, just using a simple swap, a linear swap that Robin basically showcased before, and you would say, just as a matter of example, you managed to find somebody that would have bought the swap at the 10-year level, right? So 29.65, that is the 10-year average of the index. And if you look at the minimum value, which is surprisingly also this year Q1. So let's say you would have hedged and you would have probably traded in the contract that Dan just now presented 100 lots of that structure. So you basically take 90 days, 24 hours times 100 lots, and you have your strike you traded on, so 29.65 minus the 19.87. So you down 10 ticks. That would have meant you would have made around 2.16 million euro on that contract, right? And if you lost on the power side, that would have probably helped you to compensate for that, right? And that's just one example that is very in the recent past where people, I think, can understand how you can hedge it. And if you have sufficient knowledge in-house, and if you have good connection to the market, which hedges or buys and sells weather products, then you would have probably done it anyway on an OTC basis. But of course, OTC brings always a lot of paperwork with it. All those structures are based on ISTA paper. So you have like your typical KYC, you have your credit discussions, etc., etc. So it's a lengthy process. It is pretty much also dependent how good of a price you get. Do you find the right counterparties to trade with, etc., and do you also are able to get it done timely? Because most people also trying to avoid trading too close for the forecast period, so you wouldn't have to make sure you know your position you want to hedge actually well in advance, right? If you bring all that now on an exchange, it's cleared, so you don't have to do the paperwork, you don't have to look about what you have to do on the credit side, etc., etc. Plus, it becomes also more liquid kind of product, because the exchange should be the place, actually, at least in theory, where people having different positions find each other together. And especially a great counterparty for hedging against low wind would be potentially utility, right? That is more exposed if there's too much wind, and then the electricity that I produce is actually losing its value, right? So I would like to get paid in the other direction. So finding more complementary parts than just going into, let's say, a different market like the reinsurance houses that are more risk warehousing and also having just certain limitations, how much risk they can take on in a different area, right? The great thing about that product in our perspective is it's a standardized one. You can trade it also in small increments. You can do single month. You can do strips of different month combinations like a Q1. You can do whole year structures, etc. So from our perspective, a great achievement bringing those products on an exchange. And I hope that also more players see the same thing and that we see more activities going forward on wind. Yeah. Because like looking at how we use it, it's like one of our main tools next to using temperature or precipitation. Which would lead me to my next slide. A little bit an outlook of what can also be done on the temperature side. Most of you probably know there's a lot of activities on a different exchange trading HED or CDT contracts. And they're just a limited amount of locations one can trade. And you either go with a very dirty hedge and just using one location, or you build kind of a basket of different ones. But that also doesn't bring you the same fit, right? We've been doing some research and looking at the East US gas demand index that was provided by Enwex, and saw a great fit. If you look how it's constructed, it also totally makes sense. So if you look at the left-hand side on the map, those red lines basically showcase which parts of the East are taken, and then it's an index that's basically weighted on population of the different states. So it's a little bit of the same approach. If you take New York as an example, it's with state New York with about 20 million inhabitants is like also one of the highest weights, which totally makes sense given the demand that it is. And if you look at the middle example, you basically have on the horizontal axis the Enwex temperature, and on the left side of the graph, you have the residential gas consumption, right? And you see how well that actually fits. So we talking here about an air square of around 98%, which from our activities and what we see there is certainly way better representing the demands at anything you can trade on HEDs or CDDs, right? So that's just a little bit of an outlook of what can be done already OTC, and I hope that we see that index also listed in an exchange in the very near future, that can actually trade and probably take away some of the liquidity that we currently see in the US on a different exchange, just bringing it to that one because we just see way a better fit. Yeah. So that's a little bit in a nutshell how we are basically using those indices amongst others, of course. But we see Enwex as a very good fit for a couple of the trades we're doing. Yeah. And with that, I would basically hand over to Joe.
Yep. Thanks, Ronnie. We always like it when Dan and I always like it when we hear customers talk about how important exchanges are and the role that they play in managing risk and price transparency. So well done, and we're glad to have you on board with us. So I'll just take you through real quickly how to access our markets. It's really no different than any of the other futures exchanges for getting yourself active to start trading our products, as Dan mentioned. Our clearing firms are the most important part of the activation process. You need to have a relationship with one of the 6 firms, either the 3 direct clearing firms, I'll mention them again, in StoneX, ADM, and KGI, or the indirect clearing firms who use carry brokers in Mizuho Bank, and in Marex and Straits Financial. So those need to be part of your connectivity point with us. If you don't have a relationship with one of our clearing firms, you need to tell your current clearing firm. And there's several trading firms out there that do have relationships with some of the bigger banks that are still in process of onboarding with us. But you really do need to push them to make them move a little faster. We're in contact with all of the clearing firms, and especially now after our FBOT license, we'll be talking to a lot of the firms that are connected with in the U.S. For clearing. So that's really the first step. As Dan mentioned, the clearing firms are listed on our website. Once you do that, you also need to register with Abaxx, whether you're going to be trading block trades or on our central limit order book. The registration process starts with an outreach to us, or we can connect you with our onboarding team, or as mentioned on the slide the QR code, you can scan that, and that can help you start the process for onboarding. As Dan mentioned, also block trades an important part of the process of executing your trades and bringing them on exchange. We have a list of brokers that are interdealer voice brokers that are registered with us, and pretty much most of the major firms, and in particular the 2 broker firms that are active in our weather contracts, our wind futures contracts, are registered with us. But you can take a look at the list on our website, and if there is a broker firm that's not listed there, you can let us know, and also let your broker firm know that they need to register with us. We also offer access to central limit order book for trading if somebody does want to trade electronically. We do have market maker programs available if there are trading firms that want to post bids and offers on the screen. There are 3 ISVs that are connected with us now. The 2 that have been with us for since the beginning when we launched are TT and CQG, and we just added Stellar trading platform just last week. So that's a platform that is been used quite a bit out in Asia with market making firms. It offers a lot of good spread trading. So if there is any interest in trading electronically, you also do need to register, execute our user license agreement, and let your clearing firm know to set you up for trading on one of the 3 platforms that are there. I think as Dan mentioned also, if there are any questions, please submit them through the Q&A button down the bottom. That's pretty much the process of onboarding. It is important to mention that several of the recent firms that registered with us did mention to us that it was a very smooth and easy process to get set up with us. And again, just reach out to us if you have any questions or you want to start the process. So with that, I'll pass it back to Dave to start the Q&A process.
Thanks, Joe. And now we'd like to answer any of your questions. And Robin, Dan, Ronnie, and Joe will be joined by Alistair, our head of environmental products. As a reminder, you can continue to submit questions using the Q&A feature on the Zoom controls toolbar on your screen. So let's dive into the questions. The one, I think this would be a good one for Dan and perhaps Robin. We go through things a little quick on this call. So the question was, how are the German indices settled each day? What are the values based on?
Sure. So I'll start off with that. I did mention, kind of the distinction between our daily settlement price and our final settlement price. So the daily settlement price is what's going to be used for all the contracts, except for the maturing contract on its last day of trading when all the index values are in. And the standard practice, I mean, there are some nuances exchange to exchange, but we want to look at a sample of trading activity done at a representative time, and we call that the settlement price period. It's typically, anywhere from 5 to the last 30 minutes, or a defined 5 to 30 minute period in the latter part of the trading day, and that will help us to set the curve and the particularly in the front of the curve where we give greater weight to, will, presuming there's a level of active trading activity, we'll take the weighted average price. And absent trading activity, we're looking at what is the bidder offer that's standing in the marketplace to range bound where the curve is going to be. And it's not so much we set the curve as it is the traders in the market do, with the trades, bids, and offers. Um, we Joe and I came up with this many years ago at another exchange we worked at together, where we didn't say we don't make the prices here, we just make them known. It's really guys like Ronnie and those traders of you on the call who set the daily settlement price. And then, of course, the final settlement price is the very definition of the contract. We're just going to take the average of all the values that are published for that contract month by Enwex. So a typical cash settled contract. During the contract month, we'll keep an eye on how much of the index value has been published, and we'll use that statistically to range bound where we're coming up with the interim final settlement price leading up to when all the index values are published. But at the end of the day, that definition of all the index values during the contract month should give everybody, well, that is the definition of what the final settlement price is, and everything else is the expected until the contract matures.
Thanks, Dan. The next question is for Robin and Ronnie. As Enwex is calculated on a forecast basis, can Robin tell us more about the accuracy of the forecast versus the actual? And for both Robin and Ronnie, please discuss the benefits of this methodology for hedging versus taking the actual realized data.
Yeah, maybe to start with, we today here talk about the German Wind Index. We backtested that against the announced materialized production. And a typical value taken for accuracy is root mean square error here. And on an hourly base, over the last 12 months until summer this year, we had an accuracy of a bit less than 4% root mean square error on an hourly granularity. Putting this into perspective, we here take 12 grid points, one weather model, one generation curve. So guys who are doing, let's say, a more holistic approach of those more than 12,000 wind turbines, with each of them having at least several hundreds of generation curves, the best forecasts on a day-ahead base are about 2.5 root mean square error, depending a bit on the type of weather per month. So it is worse, yes, but to a minor extent, and the improvement from day ahead to intraday in the modeling is less than 0.5% by the best ones. So it's not that major step of improvement if you would wait for settlement for announced production figures. Ronnie, maybe your part?
Yeah, I mean, like from looking at how we using it, I mean, generally, if you look at weather derivatives, there's no perfect hedge as such, right? It's all a proxy, and other indices function a little bit different, but like generally, the underlying weather is basically the same, right? It's ECWF, it's ERA 5, 100 meters. nm per second. That's what the input brings. And in the end of the day, for us, we hedge positions for a month or a whole quarter, and then on that granularity, the few point dots up or down from a day-to-day basis is not moving the needle, right? So we wouldn't do any trading activity based on that. So that's fully sufficient for let's say our needs, to use it in that way.
Maybe I want to add one point of view on that. Choosing day ahead as well on the back of this is thought for hedging. This is thought for handling power or gas positions. And those markets usually set a day ahead, besides Australia, but they have a day ahead settlement and then starts more short-term trading in a separate market. And we publish those day ahead settlement values always some hours in advance to the power or gas settlement findings. So if you, for example, start to combine the volume, the wind, with power prices, then you have your percentage utilization of maybe a hedged wind farm, can multiply it with the power prices later on, but can also put Bilanzkreisstellung in German, so put your position into the auctioning of the power pricing. Yeah. So it is thought to be used in power and gas markets, and therefore we are in advance to those settlements day ahead. That seemed more important than that minor step of accuracy gain in waiting for the intraday.
Thanks, Robin. And thanks, Ronny. I think this next question go to Dan and/or Joe. Which current clearing firms are clearing wind futures on Abaxx? And what should I do if my current clearing firm is not currently a clearing firm of Abaxx?
Yeah, I could, if you want, Dan, I can jump into that. So right now, well, I think all clearing firms that we have listed are capable of clearing the weather futures contracts. I don't think there's any that are excluding that from for their customers that are connected with them. So I would, without we mentioned ADM in the press release that they were involved in the first trade. Also, Marex was involved in the first trade. Marex being indirect, ADM being direct. But there are 4 others on the website too. So if you don't have, as I mentioned earlier, if you don't have a relationship with one of those, we can put you in touch. There are contact details on our website for all of our clearing firms. And to the point of the question of what happens if I don't have connectivity with one of your current clearing firms, you, again, as I mentioned earlier, you can tell your clearing firm to get moving and get connected with us. Or again, there are 6 in total that we have. All 6 of them are very keen to for activating their customers to trade these contracts.
Thanks, Joe. And there's still time if you'd like to submit any of your questions using the Q&A feature on your Zoom toolbar. I've got a couple questions left in the queue right now. This one I think would be good for you, Robin. Maybe someone who liked Ronny's chart. Where can I find historical index data?
Yes, indeed. So as we are just an index provider, we also provide the historical data of those indices. So we have an API for that. You can easily onboard that and download data back, as Ronny showed, to 1980 for R5 at least, also translated in the Enwex version. This is thought to have a good understanding of volatilities and trends, and the exact index figures as calculated in the current setup going back to 2013, as we have a historical easy operational history since then. So you can download these different data sets and clearly do your risk assumptions and whatever on that.
Thanks, Robin. And I see one more question. I think would be a good one for Joe. And that's, which interdealer brokers are currently set up to broker Abaxx Wind futures?
Yeah, that's a good question. Again, as we mentioned in our press release on the first trade, Tim Boyce at TPI Cap was involved in the first trade, so they are set up They're located in London. They're able to broker trades, find liquidity for traders that want to execute on block trades and submit them to the exchange. And again, the list of the other brokers that are fully set up with us are listed on our website. And you can go to abaxx.exchange and look at the resource button on the website, and I'll show you the brokers, again, the brokers, the interdealer brokers, and also the clearing brokers.
Thanks, Joe. And we've had another question come in, which is probably more oriented to Dan or Joe. Where can I find historical data on trades and volumes? Can you also share some insight on the volume traded so far on the current live German wind onshore product?
Yeah, happy to. Yeah. The all of our market data is published on our website. So go to Abaxx Exchange and prominent uh, item listed is market data, and under there you can pull both current and historical information. Only a handful of trades so far in German wind, but we always expect slow going in the beginning. But we got a lot of firms in the pipeline getting set up to trade. Certainly a great response to our webinar here. So we do expect that's going to pick up as time goes on. But all that information's really at your fingertips on the website.
Yep, and it's probably worth mentioning that we're also, working with other data vendors as well, and our data is available on TradingView. I know many people have access to that, so you can go there and pull up charts and everything else you want to do in the format you're used to seeing it. All right, thanks, Dan. Well, that looks like all of the questions that we have in the pipeline. So with that, I'd like to thank all of you for joining us today. We look forward to working with you as you begin trading this new weather futures market. If you have any further questions or would like information on connecting with Abaxx Exchange, please feel free to reach out to any of my Abaxx colleagues personally or email us at sales@abaxx.exchange. Thank you all very much, and we'll look forward to talking with you soon.